Yo, 365, shake my hand. Good morning, everyone. Just a quick short introduction to the video you're about to watch. There are a couple of things I need to explain because it was recorded yesterday on the 27th of September, and today is the 28th, and I've just done a couple of touches and counts, right? So me and my little brother, if you don't know my little brother, 19-year-old 365 trader, extremely profitable in synthetic indices. When I taught him 2 years ago, he was focused on currencies and all that kind of stuff, but he fell in love with all the synthetic indices on derivatives, and he's really been focused on that for a very long time. Kind of like shared a profile on him, shared his results, etc., etc. So what we're doing is we're starting a deriv series on the YouTube channel. So our first video, I'm going to put it right up there. Just right click on this link somewhere up there, right click and open on a new tab and then watch it after. Was on step index. So step index is a sell profile asset. It's just simple, right? So have a look at that video and see how we use supply and demand. Vix75, right? Quite the most popular index. We looked at that yesterday. And off the bat, I'm going to tell you right now, there have been a total of 38 daily time frame demands. Only 38 in the last 5 years. A supply and demand trader, that's important information. If you're an intraday trader, that's important information because that's going to govern the trends on your 15 minutes, 1 hour H4, depending on the factor of 4. So if you enter on the 15 minutes time frame, you're obviously looking at plays on the 1 hour. But the 1 hour does what the H4 does, and the H4 does what the daily does. All right. So there have been 38 demands. And so that's literally all you're about to see us do. You're about to see us identify all the supplies and all the demands. I focused on the demands, and I just want to quickly show you this chart here, even though the real video is going to play in the next 30 seconds, right? I literally focused on demands because all the supplies were broken eventually. Why? It's a buy profile asset. V75 is a buy profile asset. So any supplies created on the 19th of August, 2016 till today, eventually see it. So yes, you're more than welcome to take the sells if you're not reach supply and demand levels. But I'm saying out of all these 38 demands, and this is why backtesting any trading strategy is important. But this is why I will always rally for supply and demand. Imagine this, out of 38 demands created in the last 5 years on the daily time frame, we can find more demands on H4, more demands on H1, but daily is a very significant time frame to kind of like sit down on. Only one failed, this one here. Now, when I say a demand failed, because you're going to come back and I want you to back test my back test, right? That's the only way you're going to gain confidence in your strategy. The rules that are being applied are the rules we teach in our course. So please remember, a demand is a demand if it is valid. Number one, right? So it's got the imbalance rule, drain the areas of value correctly, all the rules of institutional supply and demand. We will not judge a demand that breaks here. So just a quick example. Like, why didn't this blue zone hold this red candle? That's impossible because the rules of supply and demand tell us about glass effect, that essentially after 2 touches on an area of value, we expect a demand to be broken. But we also know that there are PCP demands that can only take 1 touch, right? So when you're back testing, you're not just back testing turning points and supply and demands on the liquidity rates, you're also testing the rules that govern these supplies and demands, right? And out of all the rules, this is the only demand, and it's so I had to have, putting out a video that says 100% supply and demand trading strategy works would be considered clickbait. The reality is this demand that I'm telling you failed did not fail. It gave us 1 good day of a solid buy. For an intraday trader, that's pretty much all they need. Number one. Number two, this literal demand is sitting at the crown of a massive supply. You've got a bearish engulf in here, got another bearish engulf in there, and then itself is broken with a bearish engulfing pattern, right? So there was an obvious downward trend, right? So we didn't expect the demand to work. So make sure you are fair on your zones. Leroy, what's going on here? Turning point, if you draw your area of value there and you start to look for the imbalance rule, you'll realize that by the time you get to your second candle, you're already encountering supplies. You can't count a green candle inside a supply. So do exactly that when you're back testing your stuff. Correct rules, proper application. But yeah, just enjoy, guys. As usual, I'll be back testing every single synthetic index that you guys want me to look at. So just comment down in the video. Me and my little brother will make the time to do this. But I hope you enjoy this. And if you do like it, do let us know by just liking, sharing, commenting. Talk to us. We'll keep creating content. But I've also then funded. So I put about 2,000 rands into this account. And since it's a popular retail trader thing. You guys, I hate synthetic indices. I hate the fact that it's not a free market. I hate the fact that we're openly playing in a broker manipulated market. I hate the fact that a lot of traders assume it's just technical analysis, and then they fail to understand the fact that they're actually completely in an algorithm system, right? So there are a lot of things that I don't like about derivatives of broker and synthetic indices in general, but it's tradable. It's very much tradable. And so we'll be trying to grow this account, and I'm going to add this into that series, how to 5x, 2x, 10x your account, because it's quite a fundamentally a real amount that a lot of traders would start off with, right? And before I can do that, I am going to back test everything. I'm going to make sure I know which synthetic indices work for my style of trading, right? And then we're going to focus on those, right? So you can see all these supplies get taken out because we're in a buy profile asset, right? So I don't want to waste too much of my time. Enjoy the video, shake my hand, let us know if you guys enjoyed it, and we just start the entire breakdown, right? This is very parabolic. It reminds me of Bitcoin 2016 before the 2017, if you get what I'm saying. Parabolic move before the thing. So this could be the beginning of VIX changing its profile right now. What we did discuss with my little brother last night is the fact that, well, we did get a nice significant bullish engulfing pattern here. So what we're going to see how the last 3 to 4 days of the month of September help push this candle up. If it pushes this candle up and it closes just above there, that would be a good sign. It would tell us that it's retested the bullish engulfing and it still wants to go up, right? So winning strategy, as far as I'm concerned, but back test it for yourself. See how we back tested it and see how simple it can be. Just simple rules and a lot of patience. Taking trades or understanding price from the daily perspective requires a lot of patience. A lot of patience has a tendency to reduce the amount of losses you take in the market. The opposite is true. If you're not patient and you keep rushing for random zones, random areas, you're going to have a problem. And towards the end of the video, I added a confirmation system, right? I use pivot points. So I will be introducing a lot of pivot points to derivatives because I think you will need to know that kind of stuff. Why? It's a retail trader play. It's not the Forex market where you've got large banks and speculators and institutions where we purely supply and demand. Here, you need to know your enemy, right? Retail traders, you guys are all competing against each other, against the broker, all right? And it's quite a stupid fight if you watch it carefully. Look at all the way the support and resistance zones are. You find out where all the moving averages and the indicators keep pointing to people. So we're going to use supply and demand, and we're going to use pivot points for intraday traders who want to trade the smaller time frames, right? You're going to still take supply and demand zones only, but you're going to use pivot points to kind of like just clarify the trend of the day, right? And I spoke a bit about it towards the end of the video, but I will be doing a second take on that kind of stuff, right? 365 guys, shake my hand, enjoy the video. See you on the other side. Peace.
Right.
All right, buddy. Well, good to see you, man. Shake my hand one more time. Yeah, facts. Listen, and by the way, yesterday I already hit record, but yesterday, you're aware we did 2 hours on a Sunday morning. We didn't even look at charts, bro.
yeah. I was checking the time, bro. I saw time fly, bro.
Fly. 7 to 9, dude. Let's crack the code. Let's crack the code. Right, my guy.
Right,
so
right.
First of all, I owe you an apology because I know I've been postponing this session for a very long time.
Yeah, that's true.
Real talk, my guy. I just need to sit on top of this new crisis in the financial markets. But then again, I'm also teaching, so most of my nights are booked out. But yeah, let's do it. So V75. So once again, you remember, I think it's been like maybe a long time, 18 months, 12 months to a year since I last. And whenever I traded synthetic indices, it was just more of an experimental thing. So I'd go crazy, lot size, get out quickly, lose here, lose there, but I never did a systematic approach. So that's what I want us to do in this series. So It'll be nice if me and you do all of them together. I don't know if you want to do that, but it'll be nice if we go through
I'm down. I'm down.
down. All right, then that's cool. So maybe we need to do more than just once a week type of situation. But I think for the most part, I mean, I can share the screen. We did a very good job with what's the thing called? With step index, right? We were pretty much right on the money. And I know before I started recording, I discussed this current trade that I have going on here that I'm thinking about, even though I want to see what's going to happen here. And we've spoken a lot about that. But tonight, I just want to focus on VIX. But if you go back to our daily chart, I mean, we did the step index about 2-3 weeks ago now. All right, in that level that we spoke about, markets came back. There was that short-term buy that we looked at. Markets hit the buy somewhere here, right? Came back in and then sold, like, because this thing has been selling from, you know, goodness gracious. The only thing I hate about this synthetic is the fact that the minimum lot is 0.10. So that's a big problem for me, because a lot of people won't be able to handle that, right? So even me, look at this. I literally put 2,000 rands into this account. It's still at 130 US dollars, not much. And at 0.10, it means I can't trade anything for a very long time until I clear this index. But we'll talk about risk management and all that stuff later on. Just to wrap up, Step, because this is what it looks like on the deriv governor. Trash, bro. This broker is trash.
Yeah,
right?
Word.
Right. So for now, we've got what looks like a bearish engulfing pattern, right? We've got but there's still a couple of more days left in the month. Today is the 27th of September. Let's see. So 28, 29, we've got about 3 or 4 days, 3 days before this candlestick closes. If it closes as a bearish engulfing pattern, then I'm excited. I'm excited because the downtrend will continue. What I won't like to see is during the daily and weekly time frames, markets will have to retrace. You know how it has a bearish engulfing always has to get retested, right? So for example, there's a bearish engulfing pattern on this chart that happened. Markets came back and gave it a retest. So that's something I'm interested in, because you see, they came back in, right? So that's what I mean. And then he did it again. He did it again. He did it again. He did it again. Now, I want to understand how deriv operates, how it fills its orders. Bearish retest. So now we've got this situation here. There was some, you know, what we would call Talitha areas, consolidation, price drop. If this is a bearish engulfing pattern, I expect markets to keep going down, but I also expect a deriv to be looking for people with these long wicks. One, look from there to there. So basically it might feel a market efficiency, open where the candlestick closed and then shoot right up. So once again, Seth, I know you told, I agree with what we said and the order that we deleted here, but this is by itself on the H4 and I don't like it, bro. I don't like it, because I prefer to camp somewhere in here. But then we spoke about that M formation and all those problems, etc. So I'll play it by ear, but at least I'll know how committed the buyers are if they break this area of value, number one. Number two, how it'll look at the end of September in 4 days. We're going to make contact with this supply by tomorrow. If it's tomorrow is a green day, we're going to make contact with this first supply. So we'll see. But I've removed the pending order here. Right. Okay, cool. Anyways, today is about VIX, right? V75. And what I've done is I've kind of like, so I'm just gonna close a couple of charts. We're gonna work off one chart, but then you remember that idea that we spoke about yesterday, or that you gave me, to kind of like let these load individually like this, which I thought was just, yeah, I see somewhere, somehow I deleted the monthly chart, which is unfortunate, but it's not too important, right? It is important, but I'm pretty sure if we don't get it to load quickly, we can just move on. Right, so you just quickly put on my template. I just like candlesticks in a particular way, right? So this is what it looks like on the M. There we go, right? So I've just been looking. I haven't done much without you. I've just been looking. You know what's awkward is, before she went to the room, she asked me if I want anything in the kitchen, and I said, nah, I'm fine.
I guess you want tea right now. I'm just guessing.
Hey, bro, I'm thirsty as hell, bro. A cup of tea away, bro. I don't even want to say the message because I screwed up big time, right, my G? So this is Vix75. So we're gonna back test this. If you're watching this on YouTube, don't forget to like, share, and subscribe. Only if it adds value, right? If you think this is gonna help you, I would love to know. So I'm fundamentally a researcher and I operate from data. So the number of people who come to our channel, visit our channel, watch our videos, etc., that's data that I review on a month-to-month basis. So if you guys like this stuff, do let us know, right? I'm with my brother, Safe, 19-year-old who is obsessed with synthetic indices. I mean, I've posted his results many times before on a live account. He does phenomenally well, right? I'm really proud of him, right? So there's no one better in my perspective to kind of like back test our trading strategy with Safe. Bro, when were you here? When we did like a massive trading workshop two years ago, give or take?
Yeah, true. Yeah.
Years ago? Yeah, okay, cool, man.
2019.
Right, cool.
Yeah.
And now you're gonna be here full time from next year.
Yeah.
Let's rock. Right, okay. So say number one, I think VIX is a buy profile asset. Most of the screenshots I see on social media of selling, but I think it's because I'm only checking social media now, recently, and obviously recently this thing has been trying to turn. But to me, this reminds me of Bitcoin 2016 before the 2017. It reminds me of NASDAQ before COVID 2020. It's a very strong buy profile asset, right? It's got its selling months. It moves more violently during the sales, but in the bigger picture, whatever Deriv is doing, because I still need to understand the mindset of this broker, because remember, this is not the exchange. This is not a free market. This is literally a heavily manipulated market because it's owned and controlled. All conditions are set by Deriv, all market conditions, which means it's even worse than having a broker with a trading desk. You know how much I hate trading desk brokers, because Deriv has one book and knows exactly where everyone is camping and can just spike that area. And I'm pretty sure they do that quite a bit from what I've seen, right? So what we want to do in this video is to come up with a strategy for V75, back testing supply and demand, and then understanding the tweaks, because I don't think it's going to fit perfectly, right? You saw with step index, your supplies can get cracked by 0.17 to 0.25%, but price will still fall. So those are the kind of like tweaks that, you know, we might need to kind of like look into. All right, so I'm just going to start this the way I start any asset, the way we teach the course in general, by looking at you know, significant turning points, etc. The first one is here, but I know for a fact this is not an imbalance for me. So I'm just approaching this the way I would approach stocks, crypto, forex, supply and demand, right? And I want to see how it fits with VIX. This is not our imbalance rule here is not met. Confirmed, right? This is not an engulfing pattern. There's no, so for me, this is not a supply for me personally. So immediately when I saw that, was it a couple of days ago, I decided to just throw in a fib. Okay, fine, swing high, swing low. And you can see there's no brush on this platform. Man, I miss TradeView so much.
The value trade increases a spam.
It does, and it doesn't save your notes all the time. I did so much work on this stuff last year. That's why I never came back to it. And then the next day, my laptop went to sleep. I came back, it was all gone. Right? Look, markets set or tried to sit inside our golden ratio area. So it's definitely a very good retracement. So I know that basic tools will work on this thing, because synthetic indices is just a technical analysis game. All right, that's what it is. It's pure technical analysis, right? So I've got this retracement going on here, and then out of interest, because price was being saved there, I know for a fact that markets were aiming at some type of demand here, and I'm starting to realize that it is so much better on synthetic indices to cover the order block. Yeah, to cover both essentially. So you know how in forex we wouldn't do this. We'd look for the reasonable body candle and then take that as the area of competition. For VIX, it seems you want the actual order block. So if it's a 365 candle, no matter how big it is, cover the whole area. If it's complicated, So this makes sense. So if price does hit a demand and sits on top of a retracement. So for me, whatever was going on here might be over between now and December, right? So for me, this is starting to look right. I can't confirm it yet, but it's starting to feel like we're about to see the end of selling and the beginning of buying, right? From a bigger picture perspective. That's number one.
Like especially today, there was a major buy.
Like,
was just
thanks. Thanks for telling me now. Right, like you should have told me in the morning.
I did take it as well. I just seen it now. Don't worry.
You catch the retracement, right? So check, and this red candle for the month of September makes sense, right? You're in a bullish engulfing pattern. It must get retested, right? So let me drop to the weekly, and the weekly is this. So I'm gonna do both. So maybe let's just build from one chart for now, but let's delete the Fibonacci because it's too many lines. Too many lines. Right, so I'm going to drop now to my mayoral time frame, and I'm going to just zoom in a little bit just to see what's going on here. Right, so now I want to just kind of like scope out immediate areas of value. I mean, the right thing to do would be to back test the entire history, but as you can see for yourself, there's almost nothing serious. Like price is just moving up. Retrace, create an order block, use the order block, blah blah blah. Same thing will continue, and then eventually it became quite parabolic at some point. But let's start from here. I mean, it's a good place as ever to start. So I'm looking at this thing. Come on, right there. So that's about 2019, right? I can't see if that's January or November, but it's sometime in 2019. And that's about 2 years. So that's enough data to use. You see, we have this problem. Problem number one, if this was the area of value, you would assume markets haven't come back. But if you start increasing, your take up until you cover the whole complicated series, then you can see markets have hit. So its area of competition is quite wide. And I think that's fundamentally because you want to leave retail traders behind as a market creator, right? Or you want to dig deep and hit their stop losses. One of the two will always benefit you. So as a market maker, right? And then markets kind of like range. Yeah.
Like I know you're a supply and demand trader, right?
Yeah.
So like the other people who use support and resistance, right? They usually turn the resistance into support. So you can see that whole Talita area right there, right? So it was this one weekly. So like for about 10 weeks, there was like a supply, there was a support and resistance right there.
Sorry, you're talking about this range right here, right?
The one at the bottom, the range at the bottom.
This one. Right.
So that resistance ended up turning into a support.
Facts. Okay, I see what you mean. Right. So this eventually broke out.
Yeah.
I won't even lie. I hate range trading strategies, man. I hate all that stuff because it's a problem. Right. And then as it's breaking out of the supply and resistance, you go back to that W formation that we're talking about earlier on. Right. So markets really overextend on the final leg. All right, cool. Thanks for that, man. Thanks for that. That makes a lot of sense.
All good.
Right. So this is definitely a retail traders market. I don't know why. I feel like I should be the one struggling in this market versus retail traders, because a lot of retail traders are price action traders, support and resistance traders with a lot of indicators. But this market, it's catered to them. I mean, what's the problem? Is it more maybe trading psychology? Like for me, I believe I'd struggle because I'd always want to go against the grain and pretend I'm trading like the banks as well here, whereas I'll most likely get burnt. Right. So markets break out, support becomes resistance. I'm seeing a demand at some point, but then clearly to cover the entire area, markets hold the level and then stretch out. Let's move this a little bit in. So I literally saw this earlier on during the day. This is how I would draw this zone on the weekly. I would assume there were two demands and price chose the first one. right? And I don't even like the imbalance, by the way. I really genuinely don't like the imbalance here. But it nonetheless, markets hit and landed. And then I'd assume that just underneath there would be this bullish engulfing pattern. So I have no problem covering the whole thing like that. That's why it was the way it was, and saying, okay, fine, there was some type of a demand here, right? Markets, two bullish engulfment, complicated 265 candles, weak imbalance for in the third round, but at least there was an engulfing pattern. But markets chose to sit at the top. All right. And then again, if you start to draw those support and resistance stuff right there, right, you can see markets got rejected here, fake breakout or some type of breakout, markets drop back in, rejection, 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 explosion, right? Breakout to the upside, breaking through this resistance, right? Then it becomes support, and then markets make contact and explode up. So the basic retail trader stuff is still at play so far. Right, and then at the top of our weekly chart, I'm seeing there's always a consistency of markets not giving us committed supplies. Yeah, there is just like it'll work, and I'm like, but who are you fooling? Like this happened, right? And then retail traders might have caught a trend, essentially by week 3, a trend, and then markets buy back. As soon as there are a lot of sellers, markets will buy back. But we would have known that it's about to happen because once again, there are order blocks present communicating that here is an area of value where demand exceeds supply. So we know this about this area. So markets hit there, but then markets went back up. So that makes sense. I'm happy that stuff is working. And then markets give us a bearish engulfing pattern. So this is our first supply on this chart. The first time we just had a turning point, right? And that's what I'm trying to teach in module 1 right now. The difference between a turning point and a supply or demand is the imbalance, right? The imbalance is important. So then I would say there's a supply here for the first time. There's a real demand here. But now look, when price leaves a supply, and this one is built with its own imbalance. It's an engulfing candle, right? Markets break this easily, which is what we expect because it's too close. You are buying high, way too close to a supply. And then there's a PCP that is created to break the next demand, and markets continue all the way down to the first ever real low demand if you're talking about the bullish engulfing pattern. When markets come back, remember we already deemed this as a real supply. So it makes sense that markets drop. So all of this particular swing would have been easy for me to take. This swing would have been easy for me to take. This sell would have been easy for me to take. But this long turn here would not have made sense with my trading strategy so far. All right. Are you fine on the weekly time frame?
Yeah.
There's not, I don't see the point of doing something like this right now. The tools, getting used to the tools here. I'm not yet sure if there's a need for us to draw that right there. I mean, I can see an imbalance, but I just don't get it. I'm not yet sure. Yeah. And then today's Monday, right? Literally today's Monday, and it's the first day of the week. You can already see the weekly candle is this big, right? That's crazy because this candlestick here, this red one, is the whole week last week. It's literally Monday to Friday, Monday to Sunday, actually, or Sunday to Saturday last week, this little red candle here. And today being Monday, like, because you say today was a big buy day, I can actually tell because on the weekly time frame, the candlestick is already as big as the same candlestick that lasted for a whole week. So I wouldn't be shocked. Yeah, I wouldn't be shocked if this is an engulfment candle. If we're looking at the makings of a bullish engulfment candle, right? Number one, but anything goes. This could also be the beginning of a PCP. So markets will always find the low and the close first. And then the wicks will always represent the trading range of how far the buyers and sellers push. Now, if this is, because is this done? This continuation pattern, is this done? Because why did price turn here? Right? It's definitely a retracement area. I can guarantee that this is a retracement area for these buyers. Look at that.
Golden ratio.
Golden ratio. Like I can that much we can spot and see. But I'm wondering, like, because yesterday I was warning traders about pound USD and the fact that I wouldn't be in the buy, even if I think the market is going to buy. And I think markets actually bought very well pound USD. There was a better order block on H4. Pound USD didn't take it because it already arrived on the daily. And goodness gracious, I wish everyone in 365 would forget about small time frames for a second, because markets will make their fresh touch on the daily and react. So you eat that, then you take profits. Then you wait for the pullback into a deeper demand into the H4, and you eat that again, right? Man, I'll just keep trying to communicate it. I'll just keep trying to communicate it, but it's there. So for me, there's a golden ratio here, which makes sense why, again, you saw a lot of buying today. The question is, will it hold versus the downward trend? And this supply obviously is not as strong as this supply, right? This is a full reaction to a supply. I don't know if it in itself is created a supply as price was going down. If we're talking about markets leaving the area of value, we've got 1, 2, 3 candles, so somewhat some type of an imbalance. But anyway, that's what we got on the I pressed delete once and everything went, bro. Everything went.
Yeah. Redo button, yeah.
Bro, this is trash, bro. Right? Okay, fine. So there we go. So essentially, we know on a retracement, but we know markets are also leaving a supply. And I'm struggling to answer the question, who is in charge? Sometimes I do struggle with VIX. I have to think very hard. If I do something like this, then we can now locate that demand that I was telling you about, that I said I don't like, because it really looked like it took a lot for markets to be convinced to buy here, right? Two order blocks is a lot of power to kind of like hold the level, right? And then is this a turning point? And if it is, again, the imbalance rules are shy. So I don't expect price to be held here forever. I don't think this is a strong place right now, but then we shall see. But on the monthly time frame, just to remind ourselves, I do believe that this was simply a retest of a bullish engulfing pattern, and markets are gonna go, right? And this is our weekly buy that held this area, and you can see what it was, complicated 365 candles. It's actually exactly the same. There's a bullish engulfing pattern, and then 2 red candles. It's exactly the same on the weekly, exactly the same on the weekly. Bullish engulfing pattern, and then 2 red candles, right? So we've got market history here. Yeah, so that's also nice, because that means you can study it. Now, right now, we're just trying to map out a trade, and we're going to do a full back test, right? We have to go see how often this works. And I think the daily time frame is a good place to do that. So with the weekly areas of value drawn, so let's see, sorry for yawning, buddy. I'm like sleep deprived.
Yeah, no stress, no stress.
Like way sleep deprived, man. Right, so check this out. This is the first daily supply that I see. So this was inside that weekly supply, but now we need to find the true supply. I like how markets touch that area of value. I must say, this is exactly what we like to see in the Forex market, right? Well, supply and demand in the Forex market is almost like a 90% win rate. And that's because our stop losses are so far. Look at this, it's a clean kiss. Bearish engulfing pattern, beautiful imbalance. Markets, I like, this is the first area of value that I've seen that I absolutely like. I like this. I'm also noticing something, dude. When markets get the blessing from a higher time frame perspective, look at this supplies. This demand was so strong and adamant, price just broke through everything. So understanding what Deriv is doing on the big picture will actually be part of the shaping of, I think, the theme of the week. Yeah, it's literally the theme of the swing, the theme of the trend. Because when markets left this demand, markets did not stop for nothing here, and this is a valid supply. That's a valid supply, right? Up until price got to a point where, all right, markets had moved quite high enough, and it was now time to sell, right? So this was the logical sell high opportunity in the charts. All right, okay, cool. Would I sell here? I don't know. I'm not sure. I'm not sure, because I'm not in this sell. I'm not sure. I don't think I'd sell here. Number one. Number two, the bullish engulfing pattern on the governing time frame, and the fact that we think this is a buy profile asset. When I'm looking for confluence to where price turned, which is clearly here, that's where price turned. And I look left, that's why. Does that make sense?
Yeah.
Right. So for me, it's like, okay, fine. I can trade you because you literally are doing whatever it is you're supposed to do in terms of my rules. The problem is once you miss the fresh touch, like now, like me, I've missed this particular buy. I don't trust this supply. Look at how prices entered. I don't trust it at all.
Yeah. Like 2 days ago, I wanted to sell there, but after seeing like today in the morning, like I deleted my pin in order.
Smart man.
Like,
and it's about that thing that we spoke about offline. Let me just bring it up here so that those people watching can also benefit from it. When you've got a supply, and it's actually quite important across the board, even in the Forex market. So let's say you've got a supply, even a demand, but let's talk about a supply right now, right? It will work in both bases. And markets show us that, you know, the big people are selling. So if markets show us that the derivative is really pushing price down and we've got a supply and we need to go down with the ship and we need to go literally in the same direction with the derivative so we can make money, etc., etc. And you weren't trading before when all of this was happening. So you're waiting for the day where price will come back to a supply like this. Never, specifically, like that's why we deleted that pending order, the one you told me about on the step index. Never take a trade against an opposing area of value that looks extremely violent. So like this, when markets explode like this into a supply, it's just straight parabolic movement straight into a supply. There's a very, very high chance that supply is going to be removed, 100%. What you want to see in a supply or a demand is the way markets come to you, right? So you want to see accumulation of positions. You want price to come up gradually, absolutely, but as it's coming up, you want to see some slight dips and you know, inclinations and climbs and dips and climbs and dips, and you want it to be a journey and a journey of accumulation. You never want a strong parabolic move like that, right? Because 9 out of 10 times this demand here is strong and its first mission is to take out the supply. All right, so that's just something very important to take note of. Now, on the daily time frame, like you said, markets are driving this thing very much, you know, in, and then here there's another one. I'm not so sure if it will float your boat, but it's definitely there. Bearish engulfing pattern. So would you take that sell then? Maybe.
Like I changed my whole bias about selling. Like
Okay.
I was doing my own research, right, for preparation of the day.
Yeah.
And I found a buy. Like I'm now on a buy movement now. So anything selling, I'll take as a no. It probably will work, right? I personally wouldn't sell.
I'm kind of like in agreement with you, but I'll be more in agreement with you after the month of September ends. So on Thursday, after Thursday, so from Friday, I'll be like, look, man, that bullish engulfing was really just been a retest. And price didn't create a bearish engulfing candle on the governing time frame. And if that's the case, I'm sure by day 4, price will be here. That's how I know I'm always unlucky. So now I'll have data that VIX is buying, but now VIX is in a supply, and I can't buy in a supply.
Yeah.
So I'll have to wait for the supply most likely to be taken out, and then wait for a retracement and then join it essentially. But I do agree right now that it's looking shaping up to go back to being a buy trade. It's shaping up to become a buy trade, right? So this was what's going on here. So I don't believe in a sell here, but if it does happen, we'll be ready for it. In the sense that I'll probably want to buy it out, right? I might want to push price up, given what I see on the governing time frame, right? And then there's not much that I saw that was quite interesting. All I saw was markets struggling, really just struggling to do something simple, right? But order blocks drop, order blocks drop, order block drop, right? That seems to be the pattern right now. Okay, now how do we back test? Well, we have to go back on the daily time frame as far back as this broker is going to allow us to, and we're going to draw supply and demand zones. And when we're drawing our zones, we're going to actually like create a system where we are double checking to see the probability of how prices reacted over the years to our areas of value. And it seems like there's quite a bit of information here. Okay, this is how far I can scroll it in. This is where I'm going to stop, or start rather, start. So that seems to be the 22nd of August, 2016, and that's where we're starting, right? So number one, when drawing areas of value on V75, it seems to me that once again, your area of competition and how you perceive your entry point in the markets is crucial, because a supply and demand trader, I would not be in this trigger, right? In this particular trade, I would not have been triggered. But if I've got a PCP, complicated 365 candles, exactly, I should take the lowest as my area of value, right? I really should, because repetitively, that's how markets have been operating, right? So from 2016 or in August, markets created somewhat of a demand, right? It's going to be 10 times hard now to find a good imbalance, because if your area of value is this big, right? If it was this small, then this would have been 1, 2, literally just an imbalance, then markets going back up. But now, because your imbalance is this big, you literally might have to wait for a very good rally out of the zone, and then fresh touch to the zone, another retest to the zone, and then markets finally pushed up, right? So this demand did its job. And as markets was coming down, you can tell that markets created other demands which also did their job, right? Supplies that kept pushing price down until we finally got what we wanted. All right, which was another little step into more demands. This is a bullish engulfing pattern. Markets came into that bullish engulfing pattern on top of a bullish engulfing pattern, right? It's like literally this 10 times. Markets came in, dropped, right? So in terms of where we are today, geez, that's far, right? We'd have to see for ourselves if markets ever came back to that area of value. This one here. Okay, we'll see when we get to the other side, right? And then markets did whatever they were going to do, right? Markets went up, markets went down, markets went deeper, markets then rallied to the top, markets consolidated, and every time there's consolidation, markets will either drop or go up, which makes a lot of sense. And when markets consolidated, this is what happens in general. Something like that. Right, we've got this demand there. And we can see a reaction to the demand here. Okay, so for me, again, my rules seem to be doing very well. Markets are coming from a major turning point demand, so it's a buy profile asset, at least at this particular history in time. Markets are moving up in supply and demand. There we go, bullish engulfment, supply and demand, right? Markets leave. Trying to get this thing. There we go. Babe, I'm so sorry. I'm so low energy. Can I get some juice, please? May I please get some juice, Nana? Okay. With a lot of ice. Say it's supply, you see it there?
Yeah.
Right, bearish engulfing pattern, price hit, price goes to demand, price hit, price goes to demand, price hit. So supply to demand, supply to demand. Then glass effect, right? Glass effect. We expect this demand to stop working now. Then the money's done, right? VIX has got long wicks, eh? Bloody hell.
Yeah, I saw a long one today on V50, just a couple hours ago. Also short.
So I'm assuming they hunt and then they go buy low or sell as high as they can within the same range. Yeah. All right. So far so good. I mean, I should, if I was doing this on TradeView, I'd have a different color for areas of value that did not work, because it's actually quite important when you're back testing to actually carefully draw, to actually see it, to actually see that, okay, fine, this worked, this didn't work, and how many times did it work, and how many times did it not work. But right now we'll be golden. We can't say this demand did not work anymore, because we have rules for supply and demand. And our rules are, there's something called glass effect on price, right? The markets, as much as retail traders believe in market memory, that price is going to hit a support or resistance 10 times, therefore it's stronger. It's the complete opposite. It's literally the complete opposite for consistent profitable trading, right? You want to treat your assets the way you treat your children. You want to love your areas of value. You want to protect them, right? So price can't take too many hits in one area. Even this supply, after the two dings, you see that reaction? There we go. I need to talk about this. Another thing about synthetic indices that I picked up is it's the old school supply and demand that does well. Let me show you what I mean. And you brought it up in a different way on step index. Now, let's say markets create a demand here. Thank you so much. Thank you so much. No, I'm also recording for YouTube. Oh. say hi.
Hi, Sensei.
So what's up? Hey. Fine, you.
Good day.
I'm in love with the clown, eh? Right, check this out. Old school supply and demand. Old school supply and demand is this. Let's say you get a demand here on the charts randomly, right? And let's go back to my module 2, right? So we're talking about like literally the trap has been set. Retail traders are literally bringing price to me, right? Literally bringing price to me. Okay, so dumb sellers have entered an area of value. Love it. And then markets will rally because for us to buy, we need retail traders to sell. Love it. And then markets will come back into the demand. I'm not going to draw it, right? Love it. Fresh touch occurs. Love it. The demand will work. Love it. And then all of a sudden, let's say glass effect, let's say there were like 3 or 4 touches here. All of a sudden, the next time price comes back to our zone, just like in the currencies, the stuff that we've learned to predict so carefully, markets will break this demand. So we wouldn't be here to buy, right? But now old school supply and demand, and I'm talking about like classic, there's nothing wrong with it. It's just that when you back test it, markets don't behave like that anymore that often. It happens, but in synthetic indices, it's a big thing. This area of value here, where the demand was broken, where the demand is completely broken, right? This demand that was created that gets broken here. 9 out of 10 times, no, 8 out of 10, but we can count tonight. We've got nothing but time to really figure it out. When markets come back, so let's first extend this, so they'll break the demand. When markets come back after they've broken the demand, so let's say there's a break of market structure, whatever retail traders are looking for, but something here, when markets come back here, the supply will be formed right here. Do you understand? Here, you're going to get a supply. Not like 7 out of 10, 8 out of 10 times. It's really almost like a high probability play that markets will be like, this is the exact same place we made a lot of money by screwing over retail traders. It's going to be the exact same place we're going to make money again. When market comes back out of, they'll literally create a supply, or vice versa. They'll break a supply. Another type of stuff. I never do this in currencies, but I do see it work. Where markets, let's say this was a supply, markets will break a supply and then do the classic retest and then go, right? So they'll retest on top of a broken zone. So they'll turn a burnt out area into a new area.
Yeah, I've seen it so many times.
Exactly.
Like
yeah,
it happened.
It's like a classic thing in synthetics. And that's what we have here. Supply, supply, supply. And then because it needs to get broken, check this out. First, they thoroughly weaken the area. And then when they weaken the area, they bless it now, right? Filled up with order blocks, markets move up. So I mean, this is so long ago, right? When VIX was still getting its profile. But I do know that some people would prefer to extend this order block area right across. I don't trade like that because fundamentally, I know that at some point, all areas of value run out of money. All right, so if I'm going to take a buy here, I'll take it in its own standing. I'll say my supply is now broken like that, but I now have a demand like that, right? And that way, I know I'm looking for just fresh touch retest. But if you extend it all the way, you need to then start to think about what all these touches mean in your area of value, right? So that's done. Price then went up again. My stuff worked. Bullish engulfing pattern, very strong, 365 candle, well done. Markets hit it, markets left, right? So in a buy profile asset, as soon as we realize, because you see here, we're ranging, then we broke out. As soon as we realize when a buy profile asset, moving forward, I expect my supplies to fail, right? Does that make sense? I'm not gonna judge broken supplies as a failed strategy, right? You must always trade with the trend. So there's a supply, it tries to do its job, but eventually markets break forward, right? And markets come back, 365 candle. I'm going to remove this supply and then do that. 365 candle holds price, right? So there we go, beautiful demand so far, right? So I'm going to start extending these things to the right because markets are now arriving there. This failed. Why? Simplest answer in the world. This failed here. If this was trade view, I'd have long been done drawing this tool, right? So that failed there, right? And the reason for that is lower. So Terrible did the exact same thing as Forex markets and the banks, right? They'll always choose the lower demand. Yes, this demand is going to work for you, but for us, we prefer the lower demand. So I can't say my rules were broken because that's exactly what we're supposed to choose when markets came back, right? You always go for the lower demand. You always go for the higher supply. This is,
and it's not like that demand didn't work. It like worked twice.
Precisely because it's clustered, right? So you can imagine 2 order blocks, how much buying power. That's a very good way to see it. I completely agree with you. It literally worked perfectly twice. All right, so far so good, man. I'm just going to continue up this ladder. Turning point, clean, but burnt out. For me, I'm not getting freaked out by any supplies that are going to get burnt out in a very bullish uptrend. I don't expect this to hold much water because there's so many demands close by, but price did enter, reject, and then trade sideways, and then try and just simply find a lower area of value, right? So that's not bad. And then next one, really don't care about the supplies. There's not even a supply, but markets did give us a strong turning point. Markets did come back to touch. Look at that. It's beautiful, beautiful, beautiful. Right, this didn't work. It gave you like 1 or 2 greens, but yeah, markets wanted a low. This one worked, but it worked where it was supposed to work. Right there. Right, so prices literally just falling like 365 candles, PCPs, fresh touch, only fresh touch. After the fresh touch is done, you can't take the trade, you choose the next level. That's exactly what markets did here. That's exactly what markets did there. I'm on the daily. Okay, markets did that. That's useless. Buy profile asset. We expect this to happen. Talitha area range, very ugly, but nonetheless happening. Right, market stop there. Complicate Talitha area. Sorry, demand holding price down. So that worked for a couple of times. Right, massive glass effect, push price up quite a bit. The next demand that I'm seeing here is somewhere here. Right? That's a good demand. And then markets went up. I don't know, man. I'm starting to feel like, okay, fine. This is, I mean, this is on the daily time frame. Emotionally, you should be fine. what we need to back test after this is probably like how much these areas of value are on the daily. And then markets came through, 365, blah, 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 markets dropped, but did broke it. I'm not entirely sure why they broke it. Was it to break to touch there? Because it didn't make it. That did not make it. Or was just to break it and then fall, but to break it because the next time it comes back, it's not gonna wait. And I think that's what happened. Next time it came back, it did not wanna wait in that particular area of value. Right, and then there's supply there. When price gets here, eventually loses mind. There's a lot of friction, creates an order block to the area to the upside, right? So it's a broken supply eventually, right? But before that, markets reacted to the supply, markets reacted here to this demand. Let's quickly draw them. There we go. This is the first demand that to me looks like it struggled. It struggled even though the rules were on its side. And the reason for that is at this point in time in this chart in 2018, markets were now leaving a supply, right? So I know you're seeing this long high here, but don't forget, working on this thing on a day-to-day basis, this is literally the supply of the month right now that's pushing price down. Push price down into a demand, the price didn't go all the way back up. If this was gonna win, markets are gonna go all the way up if this buy trade, whatever was gonna push forever. Markets had to go all the way up. The reason why markets did not go all the way up was because this particular buy trade was not at all a secondary take or monster, whatever. Markets were going to go through it eventually because prices leaving a supply. When markets are leaving a supply, demands get bred. When prices leaving a demand at the beginning, supplies were getting bred. So it makes sense. So now all of a sudden, I now know that derivative has done a changeover of hands, right? They've gotten up to the peak. This is the highest point in the charts at the time, not right now, but at that time. It's massive peak, major turning point, blah, 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 blah. Now, essentially, it's just to go create the rest of the trend, so to speak. The rest of the trend will remove my demands, 100%. So that makes sense. But after you removed it, it went lower, was potentially to catch stop losses, and then went up again. Turned there, moved it, went lower, turned there, moved it, blah, blah, blah. Eventually, markets broke through this zone and then landed on our first demand here that we were waiting to know who it's from, right? So there we go. Markets hit that demand and then price just sells off, literally just sells right through. Right, and then markets kind of like complicated 365 candles, 1, 2, markets drop into that very first demand that we drew a while ago. Just trying to see. Right, so then markets are here, markets explode forward, engulfing pattern here, supplies is in order. There's a supply somewhere there. There we go, markets drop. You still with me, my guy?
Yeah.
Sorry, man. I know I'm doing all the talking, but it's just an issue of just back testing this stuff really, and then we can then slice, pep up the confidence, right? So these demands now that are gonna break the turnover, they need to be tracked. So what I mean by is, how would you know that this is the demand that's going to break the current downward scenario? And I think for me, it's really more about, I just want to see if I can turn this thing to red. I think for me, it's really just more about simply mapping out an MTA, a higher time frame. So I just want to see what's going on there on the weekly. Right, so it's that red area that I've just highlighted that I'm talking about there. I just want to quickly go to the weekly to see what it looks like. All right. Yep, still got a long way to go. See, this is like a massive rejection sign, a pin. Then if I do this. All right, so there is an order block, right? So you see markets rating off the complicated 365 series, right? So it's quite a big area of value on the weekly because it will start there and end there, but on the daily it is not. It's nice to know, right? Because after all, when soon as price leaves this whole area of value, as soon as price leaves to go somewhere else, this whole thing will fall apart. Right, so markets hit that area, markets start to rally, markets break supplies, you know, blah, 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 markets rally, markets rally, markets rally, markets rally, markets create demands, break supplies, and now all the old supplies have been dealt with. Markets can now go in peace. So markets start to go in peace like a wildling, turning points, drop down a bit. You know the factor of fours, trading to the factor of fours.
No. Oh, what's that about?
Now it's just a different way to hack MTA. So it'll look something like this, MTA. So trade to the fours. So let's say because I mean I know you like 15 minutes charts and 5 minutes chart. So you need 5.
I'm not 1 hour man, bro. Graduated.
I'm not even judging you, but if I was, I'll tell you. Right, so you need it goes by, you need a 4 to 6 factor, right? And it's kind of like how I teach it, but I just don't use these weird terms that will confuse people. And essentially, if your AP is on the 15 minutes chart, then my monthly chart has nothing to do with your life. That's not your that's not your governor for that day. So you need like a time frame that's slightly bigger but relevant to your trend. So obviously on the 15 minutes chart, and if you multiply 15 minutes by 4, it's 30, 60, right? So it's the 1 hour time frame. The 1 hour time frame would be really the hallmark of that trend for that moment, right? So like intraday trading strategy. So the 1 hour would be your gov, 30 minutes would be your weekly, 15 minutes would be your daily. Yeah, and then if you're proficient, 5 minutes would be your snipe range, right? But you know, this is nice theoretically, but honestly, my bro, make sure you understand at least in the last 48 hours what the daily has been doing, because I still think fundamentally this is a better way to do it, right?
Yeah. No, actually, like 3 weeks ago, right? I still remember we had a call about the whole trading thing, right?
Yeah. Well, at the office that day.
Yeah, you didn't explain it this way, right? Because I still remember the conversation ended with me being like my daily being my governor, right? Then 4 hours my weekly, then my 1 hour being my daily type of thing.
Yeah. And
so maybe like 30 minutes be like my sniper.
Yeah. Because it will slow you down. I mean, there's still a lot of activity there, but at least you cut the number of trades you keep taking.
Yeah, for sure.
It's quite important. I mean, obviously here I completely forgot the H4, but you kind of like get the sequence, right? So on the trading floor, we just call this a factor of 4 to 6, right? So that's why for me as a swing trader, I'm inside daily, snipering on H4, and my factor goes all the way to my govern, right? And for me, I find the golden thread of mine. But I won't lie, Vix is like, you know, showing us this kind of stuff. Like well, not on the daily so far. Why is this red? Oh, it's because I made it red before. But so far, dude, I'm actually very happy with what I'm seeing. I won't even lie. So far, I'm quite excited. Like in hindsight, my markets didn't make it all the way here, but you know, it seems like they tried to make it down there. It's just one of those that you miss in life, unless again, it is what it is, man. Because look, it's an order block of an order block, right? So this whole order block here is kind of like standard. It's got an imbalance and it's waiting. Then they create another demand here, and then keep going up. Made supply and demand number 5 as taught in the course, turning points. as long as they have an imbalance, market holds a couple of times, then markets keep going up. Sorry, did you see that? I'm on my live Forex account. Just been waiting for this sell to happen, but doesn't want. Pound USD is in a range, man. It's in an annoying range. We spoke about it, bullish engulfing retest. Check. So this is what I was saying. In the war room, I told people I'm not interested in buying. I know I'm jumping all over the place, right? Because and then there's a lower order block down here.
Yeah, you're not sharing the screen.
Eh?
I can't see the screen anymore.
Oh, sorry. There we go. Can you see it now? Yeah. So this here, dude, literally to me yesterday was like it was just one big red candle. It was one red candle and a green candle. It looked like a PCP to the downside. But for buyers for the day, they'd already gotten their full retracement, right? And then I said, look, I'm not going to buy. Because again, if you buy here the retracement, there's nothing wrong with that. The problem is we really don't want to be stopped out. If you genuinely don't want to be stopped out, your stop loss has to be all the way outside here. It's quite far, right? It's quite far for it. Yeah, like it's berserk, man. So I'm waiting for some action up there, right? I'm waiting to sell, but this sell is obviously contingent on the dollar. So that's why I haven't put in a pending order as such. It's really contingent on how the dollar will be when we get there. And the only thing that I have that I was waiting for from last week that I haven't touched is this stuff here. Also already taken it 0.618, but you can see it's returned a couple of times. So I would not be surprised if it does make contact now. Right, Euro Swiss franc on the H4, but we shall see. I do consider it quite a risky trade. USD CAD has been a party, man. Like this was a joke. Right, markets bought, engulfing pattern gets retested, tells the retail traders time to buy, and then guess what? They sell. Why? Dollar is weak. I've been telling people DXY is still in a supply. USD CAD is just gonna follow suit. Right. So see, I have no real running trades on any of my FX accounts today. Like I said earlier on, just a slow day, really. More of an admin day for me. But yeah, back to this monster, man. Back to this monster, right? So markets hit that demand, markets went thin, and then markets start to drop. Why is markets dropping? There has to be a logical reason why, right? So this was the highest point once again. So I guess a peak supply drop. That's fine. Here, this would make sense. This is a 365, a complicated 365 into that area, creates a supply, which makes sense, which is a drop. Price reacting to that supply creates a bullish engulfing pattern, which it goes up. And markets do the same thing. Markets come back and retest the demand. There are like 3 zones I haven't drawn already that I've just spoken to, but it looks like they're going to be of help. Right, so markets enter, leave. Break this with no explanation. I don't understand what's going on here. I'm going to give this a red. Let's see. I definitely have an imbalance. This one makes sense. Remember, you never buy right at the top. You'll always be in trouble. A turning point. Never buy too high. Once you have 2 order blocks before that, you already know you're buying too high. So this one makes sense. This one doesn't, unless it's at the top as well. So something like that happened. Markets come in, break out, right? So I'm just gonna make this. So because I want to know how many supplies and how many demands worked or failed, or at least that we can make sense of.
I know. It seems like that demand looks like it's close to a supply, because there's that supply then retouches, then goes straight down.
Supply, my guy.
That one. Can you see? Yeah, go up. Nah. Go where the starting of the red candle is. The red rectangle. Yeah, goes up. Then it creates a supply or a turning point, slightly up. Yeah, there.
I agree. Yeah, I
so
agree.
it looks like we're close to a supply. That's why you broke.
So now, with the back testing, we need to figure out a way. What's going on? This color keeps looking awkward. We need to figure out a way that we have to systematically prove that we're going to be able to see or know that markets were going to create a supply there before price got there. Do you understand? It's easy to say that now, and you're correct. But I'm saying if you and I were taking a trade, we need to know that VIX is about to create a supply or reacting to a supply. So therefore, don't buy there. And I'm just trying to think about that. And I'm pretty sure the easiest way to do this, man, all these, I hate MT4, MT5. I don't know why they can't just develop it to be as good as TradeView. I mean, honestly speaking, I'm just a simple color is a problem. Right, so it's a different kind of blue, but this blue is just, it'll signal problems. I'll find a better color. Right, so say you're absolutely right. So first of all, there's this problem. Problem number one is price actually used this demand. See that there? Markets actually use this demand, but that's because I've drawn it weirdly, right? So if I drew it properly, I'll do something like this, right? And then if I was taking a pin in order, all I'd have done was taken a loss. And if I cover the complicated series, then it's like that. And if I cover the competition, area of competition, then it's like that. So for me, it's quite a very big area of value. But nonetheless, price used it, price went up. But is there a way to tell that markets were always going to turn here before it turned, so that we know that we're about to get out of a situation, right? And I think the best way for that is to look left.
Look like it's the highest.
Then that's a problem, because then that's like the riff just showing up to do an original turn. Yeah, it is the highest, you're right. You see that there's literally nothing that caused it. So so this for me then becomes a thing where that trade would definitely be one of the few trades where I would not have known markets are selling until I see it for myself that markets are selling, right? And I think the first sign bestowed to us would be the supply.
The retest.
Yeah, and the fact that there's a retest. I agree with you. So maybe we would have bought here, and so far our synthetics, it looks slightly more sensitive than forex, right? In terms of all areas of value, I really would encourage us to just only target a fresh touch for now. Yeah, because it looks sensitive, man. It looks like after fresh touch, it's cowboy season, right? And like anyone can go, and because of that, markets are most likely to stop you out. So when this happened here on the daily 1, 2, right, and then markets literally spent the time trying to leave that zone, I guess you're right. We would have known it with our rules not to come back here. You're absolutely right. I just want to make sure that we don't, when building our strat for VIX, we don't just extrapolate rules from everywhere. We actually have to prove it by the charts that we could have predicted that price was going to break this demand. And the reason for that is the demand is already weak, fresh touch. Number two, price is definitely coming from a proven supply. So well done on that. I agree with you. Hey?
Thanks.
All right, okay, cool, man. I completely agree with you. Right. Look at this support nonsense. It's back now. I really look at this 1, 2. God knows how far back it goes. I want to take note of it, right? So it goes, yeah, definitely. I thought as much. So once there was a rejection here, right, you get the resistance going. If you don't get the resistance, then you get the support. Rejection that side, support here. So they'll rather take out a demand, which they definitely did, and then come and just kind of like chill here, create some type of drop-based rally, right? It's not the best rally. And anyways, the rally dead stops into a supply, and then markets come back here again. We really haven't seen something worthy of being called a demand down there. And then markets leave, consolidate, hit this area one more time. This is like the final pullback. The fresh touch, the retest, right? And then the retest is stopped by demand. These are the ones we talk about in module 2 in the course, right? So that's good. This is good news, man. Right, but maybe we're still far. Maybe this is like 2018. We're on 2019 now, right? So then all of a sudden, the markets finally make touch with supply for the third time, which we know, or at least third pull, 1, 2. For them, we know that markets are bound to be, very sensitive now. The area of value breaks. When the area of value breaks, you get a consolidation area. Markets break to the upside, and then you get another Talitha area or consolidation area, another one. Markets use it, markets use it, markets use it, another one. There we go. So do something like that. Right? And then markets create another demand, markets go up. On the supply side, it looks like our bullish trend was only getting started, right? So on the supply side, this couldn't hold. Well, it did hold, but I'll stop. The way the rules are right now, my stop loss will most likely have been almost hit or actually hit, because I just draw my stop loss up above my zone, right? And then markets kind of like dwindle down, and then boom, parabolic structure. This is a ride, bro. This would have made lots of money.
Yeah.
That non-stop rally, that's insane, right? Markets consolidate sideways here for the most part. So this will be a range in market. On the smaller time is going to be the main support and the main resistance, right? So if you like a pivot point trader, you'd see supply 1 and resistance 1 play not very well here. Long story short, markets break out. Breakout, turn, and then market stop here. This is probably a Fibonacci retracement. I'm going to go with 50% or 68, whatever percent. 50%, I thought so. I literally could tell. Right, so this is a retail traders area. Right, so markets will sit there on that 50% mark. Markets pushed up, then markets hit, the completion of the retracement, push price down, bearish engulfing pattern, broken supply. So don't trust it that much. Markets came all the way down into the area of competition and created this at 0, as a 61.8, right? 6.8 is our golden thread. Turning point here, broken supply. When markets get there, there's a new supply. Immediately we get a fresh touch. Markets are drained. And this is what we're saying now. You remember what we were saying earlier on? So so for me, again, I don't want to say the supply didn't work. All right, we can say the supply didn't work, but we need to acknowledge the rules. When there's a supply and markets don't accumulate, don't come slowly and trade sideways and build positions, and they come straight like this, straight, strong, green, 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 there's a high chance that that supply is going to be destroyed. A very high chance, because you've got a lot of bullish momentum.
Yeah, I was saying exactly.
Yeah, a whole lot of bullish momentum here, right? So there's a lot of sideways trading, markets react to bullish engulfing pattern, markets go up. A lot of engulfing candlesticks as well, historically anyways. Markets go up for three or so days, markets come down, crashing down, markets really go up for a while, and then markets also create an area of value right there. Right, and then markets turn again sequentially, and then create complicated the areas, blah blah blah. Anyway, these are all areas of value because the imbalance followed was very good, very accurate. Markets reject inside of demand, markets push back up, but because of what they did right there, they've created a supply. That supply does its job. If I was to draw it like this, the supply does its job. It is a beautiful job. Then that supply pushes price all the way down. This demand here. Something like that. Something like that, right? So the markets are reacting, markets go. There's a supply there. I'm just going to stretch it a little bit across, just a little bit. So because I'm just using blue, so I don't want them to interloop. But just remember that that demand crosses over. I'm just simply drawing a new one so it doesn't, so it stays blue and not black, so people can actually see the zones properly. Right, and then I do something like this. So markets leave, but this area demand is now that big. There we go. Markets leave, then markets come back properly, makes a lot of sense. Markets turn, right? And then again, this is not for me. This is a higher turn for whatever is going on there. Markets drop, and then markets continue dropping, right? So who's in charge? Supply is in charge for now. As long as we're breaking demands, my supply is in charge. And we need to find out why they're breaking demands and when they're going to break demands, or vice versa, supplies, blah, blah, blah. Right, but there we go. This is what it looks like here. Markets are zigzagging up and down, but eventually when they find the down is always pretty low, like there. Right, there's definitely a double bottom, blah, blah, blah. Markets go up, markets go up, markets go up. Draw it across. This supply held on, bro. This is crazy. This is my first time seeing this in VIX. So from like, yeah, dude, from the 15th of January, literally, this range, both supplies and demands did a very good job of holding on. Naturally, markets sold when you need to sell, but it didn't need to go beyond a specific level, right? And then bought when you needed to buy, but again, the buy low was always there, and a lot of people are literally, was stopped out or whatever smart money, not smart money, whatever derivative wanted to do, right? And this is literally quite a weekly idea, right? So this perfect range in the middle of a trend to slow things down, and then look at this just before they break the supply. Markets, ideally, politically, have to go straight into a demand first. So because you need a demand to take out an area of value. Until your area of value is not taken out, you can start trading the opposite, right? So markets literally left the demand very strong, not a lot of good, communication about the area of value. And markets just shot all the way up, literally just shot all the way up, then come back down. Where did markets stop when they come back down? Once again, a demand, right? So there's really been very few things I feel like writing down so far in this session, because I genuinely believe our supply and demand trades are doing the best. It's just, can people hold? Are people patient, etc., etc.? Then markets went into a supply. Markets drop. You see this reaction down here, markets got to a demand. I can guarantee that. There we go. Like that, and then markets went there, and then that, consolidation, range. So it's very unclear. Then markets explode. Right, I like that turning point there. I just pressed the wrong thing, dude. I don't know what's going on now.
Okay now.
Hey?
It's okay now.
Oh, okay, thanks. Right, so there you go. So this happened here. And yeah, back testing, I agree, isn't the most fun thing in the world, but it is fundamentally right. So I can see there's some type of hunt going on there. For at least for me, this might have been what they wanted then as a buy low. Which is fine. So look at that. Markets hit, markets come down, markets go up, we need to test trend lines at some point. There we go. You see, every time they break market structure, just like in currencies, dude, I'm actually getting excited about this, because just like in currencies, this thing is just doing the most, right? So the order block takes out, very structured, then markets just move up. Right, we've got a couple of zigzags. Imbalance which is met on the first one. Let's see if it works. No, it does not. Well, let's see, area of competition. Oh, sorry. You see, I'm looking for a reaction right there. And once again, it's given one so much earlier than expected. There, price left, price came back. It worked, right? And then markets do this 365 candle there. Now, I know I'm low energy in the video, buddy, but you know my schedule and how tired I am. But I'm so worried. I'm worried about someone watching this and going, all he did was draw rectangles. How does that help us? There's the money, like there's the full game, literally. Okay, we have
like backtest will save you so much money long term if you think of it carefully.
It's literally about 2 hours. I mean, if you back test a lot of currency pairs, it takes a long time. But if you tell yourself you're starting to trade Forex, you just want to trade USD CAD, Euro USD, Pound USD, USD ZAR, right? One exotic, those 4 pairs, and you just spend one weekend back testing a lot, writing down a lot of stuff, it'll save you so much money. Because every time a supply was broken, we were now in an uptrend. The VIX will go through moments like this in its life. All right, this is a fact. See there, range. It'll range for a while and then impulse. And then it will range and then impulse. Range, then impulse. Range, impulse. And it's in these ranges where your supplies will get beaten. The supplies will get beaten because markets have no time for that right now. This is in an uptrend, right? Remember, we did say buy profile asset right from the very beginning, right? This is always weird as well. This, I think, is the second time I've seen it, where it's not the highest, necessarily the highest turning point. Okay, so maybe this is a breaching of pattern, maybe price, because price entered once, right? Then became a supply. But generally speaking, they'll take the immediate area. So it's always the first area of value that suffice. Although on the demand side, we notice them seeking lower buys once in a while, right? But this is where we were anyways before I went on a tangent, right? So markets imbalance, broke a bearish structure, markets go, markets test there, fantastic. 365 candle right there. Let's draw it. Right, so it works, it saves price, price goes up, moved twice, used twice. Why did markets tend there for like a week, right? 4 or 5 days? Well, that's because price had arrived at a supply. Let's draw the supply, something like that. I mean, for me, I would, if you use the reasonable body, it's up to there. And if you use the whole complicated 365 series, which is what I need to get right, then it's over there. But for me personally, I would say now, price did not arrive. I wouldn't like to have this type of situation where I mean, look at this. This is literally where it stopped. Right, so it's definitely the beginning of the complicated 365. So I've seen this happen a couple of times. I'm just going to add it to my notes now. So for all complicated 365, I'm going to take I'm going to swallow the order. I'm going to swallow the whole pattern in my areas of value.
So still remember, I think was it yesterday when I was telling you about the whole three body pin thing.
That finger thing you did, yeah, bro. I tried it after you're gone. I was like, what was he talking about?
Like, okay, I'll send you the video where I saw it on Telegram, so you can just review it. Maybe it's the way I explained it.
Yeah, I mean, it sounded interesting, but because I didn't understand it, I didn't even wanna. After we spoke, bro, I just went straight to dad mode and just chilled with the kids. I didn't even look too much into the charts there. Okay, but yeah, okay, price stop there. So this is it. Complicated 365 did its job once, and then markets bought out, right? Which makes sense because what this thing has been doing since 2016, I think that's when we started, right? So I'm gonna draw my supply. And then there's that thing that we're talking about. You see the supply? When supply gets broken, markets will come back and act like, yeah, bro, we're back again.
I remember.
You see now, so that's something I need to write down again. Sometimes, and I mean, I'm not yet sure about the frequency, but sometimes broken supply and demand areas can be used as opposites or similars in return. So I know what that means to me, but in case you're watching this and you're still with us, please don't forget to like, share, comment, and subscribe. What I'm saying to you is because of the derivative has places where it wants to wait for price. So because the supply here worked out once and then but it was broken, when markets are going down, they'll create a PCP, which is a new supply, a mirror supply, right? So essentially one could draw this area like this right across. And if you draw it like this right across, you can see for yourself that even though it's broken according to our rules, markets still came back to it and fell, right? That's because they decided they like it. There's something about this area where they want to hold cells, right? Sell orders, etc., etc. Nothing on the left, right? To kind of like determine what that thing is, whatever it is that he likes or that they like to hold cells there. But this is what I mean. The supplier broken, but still reused on the other side, right? So I don't want to draw it like that because I want to make sure I'm also aware of frequency. How frequent does this happen? Now, back testing can become as deep as you want it to be, as deep as it needs to be. And if you like this stuff, let us know. We are going to back test every single asset here so that we actually know which of the synthetic indices fundamentally match supply and demand. But V75 is a good target, right? So price then gives, and again, look at this. They used the immediate area of value and broke the next one. It's kind of, that's the only thing that freaks me out. Like, it's not always specifically sell high. It's more immediate. Take the immediate area. Whereas with the Forex market, we know that the Forex market have broken through this and used the wick to trigger the supply here and then fell. This one did not do that. Yeah. Then we've got a turning point, but it looks like a very silly turning point. I won't even draw it. Then finally we've got this here. All right, markets all the way up there. Markets did not make it all the way up there. The reason why markets did not make it all the way up there once again is because markets found an immediate area, which is what we've explained is the opposing area here. And then here we are today. Markets then started to drop, not today, more like in the last month or so. This is the month of September or something, I don't know. Or August, this is still August, right? Then in this range here, we start the month of September, right? So we started the big consolidation in the month of September. Reasonable body, an area of competition for me would be this green candle, right? So markets rally into it, which is awesome, right? And then markets drop. And now here we are today, markets are literally in a bearish engulfing pattern, but both of us, I think, have both expressed that we're not really comfortable with selling here right now. And I really am not. I'd rather wait for a higher sell. Right, so that was fun, number one. Number two, if I was to do from wick to wick, this is what it would look like. Number three, we don't use indicators in 365, but MetaTrader has this in indicators. Bro, where are those Hekani hashes? The trend Hekani hash. Custom, yeah, okay, fine. So they should have just put them separately now because it looks ox, right? So if I throw in the color is about to change, and the problem with the color is, let's quickly fix this because I want red and green. Right. Now, we're almost there. We're almost wrapping up our back test. We're almost there. 365 traders, if you're watching this video, we're looking for supply and demand number 5 only. All right. Not only that, but there'll be PCPs inside, potential continuation patterns inside. And all those potential continuation patterns, we want to see what price looks like after we've drawn the blue zones, because we really want to make sure we've got this thing on the loop, because this is what momentum looks like. So you see it was an upward, blah, 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 upward trend, buy profile asset, all that beautiful stuff. But now let's revisit for the next 5 minutes, and I promise you I'll end this this session now. Safe, you've been a champ, my boy. Thank you so much for your
thanks,
man. I hope this helps you too, buddy. I mean, I know you're a G already.
It's helping already, bro. 100%, 100%.
Mr. Withdrawer. You've already like 6x the mom's account. What was you talking about yesterday? Is that a separate Forex account that you're trading for?
Currencies.
Currencies with which broker?
Other.
Ah, nice one. And then I should hook you up some stuff there as well. But yeah, you're doing well without me, so I love it. I love it. Right. So check this out. So we've flipped our candlesticks. Let's just see average buying and average selling, right? And you can see where the zones that we were drawing. We just want to see how they're holding, right? So this we explained that this is not considered broken because price has done its test, right? So this would have gone up there very deep, but retest works. That works. The supply held on and then got broken here. Look at that. So there was just zero selling. Check this out. Zero selling here, right? And that's important, right? Because remember, if there's zero selling, it again reiterates all the sell orders in the supply were done here, the first time price left, and here, the second time price left. After that, and here as well, after this drainage, there was no one here to sell. So you can actually see how your order blocks just get melted sometimes if we don't see the big picture. We drew this area value in red. I don't remember why. I think we wanted to see, I don't know, something, right? We're trying to see if it's selling or buying from a big time frame, from the weekly chart. What it looks like on the weekly chart, blah, blah, blah. I'm just going to delete it now because I can't see these candles properly, right? So markets turn, markets get into this demand. You can see Akinahashi is not really capturing our PCPs because I'm pretty sure there's a PCP here. All right, I just started, yeah, there's a PCP here that holds price, but what we can do is to help quantify the PCP. Remember in the course, we spoke about 50% body candles in currencies and stuff. And I want to bet my ass that even though we don't have an order block here in Akinahashi, it's like when you have a 50% body and you need to confirm it. So use the black dots the way I taught them, and you also need your Fibonacci to confirm that it's going to happen. So if I pull a Fibonacci swing high to swing low here, perfect, right? You've got that 50% golden ratio area where price is sitting. 50% is a retail level, there's a retail market, right? You see what I mean? So that's the thing. I think the Fib is a very important tool in trading in general, right? In general, if you're buying or selling, oh, gone. Safe. Is there a way to undo this?
Not even. You have to redraw everything.
I'm not redrawing everything, bro.
But I honestly wish they could make it like the trade view. Because using on the trade view, there's the fighting back button and
yes. Button. I was literally trying to delete the Fib. Nah, bro, I refuse, bro. Nah, bro. Freaking Elon Musk is making cars that can like go without fuel and like in freaking space, and these brokers can't create a better platform. Nah, I refuse. I'm fighting this. No. Oh my goodness, I can't redraw that stuff, bro. I started off so low energy. Like I wanna go sleep right now. Ah man, at least we're done. We're really done backtest. It's just that now I needed to see all of those zones to make a buy or sell decision. Dude, are you serious? There's nowhere to. Oh man.
There's no way. There's no way.
Okay. All right. Well, that's unfortunate because that took forever to do. Right. I'll have to redraw this first thing in the morning tomorrow. But in terms of good content, I think we got the point out. This is so unfortunate. I'm just like, I'm really, I mean, I know you're right, but I'm hoping you're wrong deep down in my heart. All right. Well, such is life. We improvise. I'm just going to be drawing lines now, I guess. Oh, bro, you have no idea how deflated my spirit is right now. It's just deflated. All right, but anyways, you guys saw that we kind of like kept track of every single turning point. This is where we are now, say. So we've got this. So now, for me, like if I was a Falcon, I don't know if you've seen Falcon strategy. Falcon guys look at impulse, retracement, impulse, explosion, and then patterns, right? Market patterns and stuff like that. This would be interesting for me. This long stretch here, I'm not trying to draw a trend line, but if I was, it would look like this. This is way too steep. But do you notice that our trend lines are breaking at order blocks, or like on the Kinashi, right? So it's very important because you at least know why the trend was broken. What I find more interesting is the fact that price doesn't take those supplies seriously. Markets did not stop here for anyone. Markets came through it and blew up. Here's another one right now, but it seems like this one market stopped. And that's the only thing that makes me wanna not pull the trigger sometimes. Because it's like, well, then which is it? You know, how do I go back to normal candles? Go back to indicators or just
right click on your screen. So then what? Indicator list.
Oh, and then I delete it.
Yeah.
Right. So this is the only thing that bothers me is it didn't work here. All right, number one, fine. Buy profile and what let me close this. Buy profile and what I understand, okay, but in any event, and then again, it's more about, remember when we drew this zone correctly. I mean, I'm gonna have to really have to redraw all this stuff because I literally need it before I can make a final decision. But I don't want to make this video 3 hours with me redrawing that stuff again. But you see there, right? So okay, fine. So we did get a fresh touch, and then markets bulldoze, and then here we got a fresh touch, and now markets are coming back up. And then when markets bulldoze, they went all the way up to the actual turning point, right? So that's something maybe to remember. And then we drop like crazy. Let me remove this. So I don't know if markets are going to come back up, but this is not an original turn. I feel like it's reacting to the thing on the left. So this is reacting to that. Right. So for me, because there's a broken upward trend, I'm seeing currently right now, structurally speaking, I'm obviously seeing some sell side pressure, even though I understand that, you know, the big picture is still formulating. The big picture being buys, the big picture being bullish engulfment on the monthly, retest of the bullish engulfment on the monthly, which is what pretty much the month of September was about, right? Month of September was about kind of like slowly coming down into things here. But I don't know if this is the ultimate buy. And it could be the ultimate buy, and I'm just sleeping on it. Let me go back to the weekly time frame.
Yeah, Lee.
Yeah.
So like during the day, right? I decided, like after seeing that whole buy rush today, right?
Yeah.
It was really too late for me to hop on, right? So I decided to look for like places where I can buy. So I ended up narrowing down to like on the 1 hour time frame.
Right.
On the order block.
Let's do this. So I'll do the MTA now.
Yeah. So like first I did like what did I do? H4, then 1 hour. Then on 30 minutes, I'll look for an entry point.
This for me is the H4.
Right.
That's a good sign. All right, bearish engulfing pattern for anyone who's waiting for a retracement like you. That's a very good sign. On the H4 time frame, there's a situation up here.
Yeah. But now I'm looking for a buy.
Yeah. And then this was broken. Right. So that's fine. So now you're looking for a buy. Knowing me, I always run to my corners first. And then I'm sure do you have something somewhere in here?
Yeah, that pin, yeah, right there.
Yeah, I thought so. I thought so, man. I thought so. Makes sense to me. I'm actually pleasantly, surprised that it sits very well with supply and demand, right? So then let's say that's our beginning of a swing high, swing low, swing high. You see your pin, fib, right?
Yeah.
I'm sure you already did all of this. You just want me to do it, but you've already done it, man. You yeah, bro. I'm just here to
I'm taking the chance to do some reassurance, right? Yeah.
Yeah. I'll buy with you. Right. So then I've gone to 1 hour now. I see.
But yeah, no, I wouldn't be shocked if price. You see that other pin, the red one,
At the bottom.
slightly up.
This one.
Yeah, right there. Yeah, I wouldn't be shocked if price takes that, because if you can see like that resistance will end up turning into like some type of support. So generally, I'll wait for the low, right? But I wouldn't be surprised.
This pin here.
Yeah, I wouldn't be surprised, honestly.
I see what you mean. Obviously, this is where the fib is telling us to be from an H4 perspective. So H4 on a factor of 4, 1 hour time frame is a good place to take. And on the H4, between this and that, this is a good medium between the two. But at the same time, for us to draw an intraday trade in fib now, shorter.
Yeah, that's what I did.
This guy is just making me do what he already did because he already knows what. So there we go.
Assurance is good.
And this will work more if Vix has finally decided it wants to go up.
Yeah, that's what I was also thinking.
Yeah. So if Vix has
decided, like October, I feel like October start blasting off. I don't know. That's just me thinking.
No, there's logic to what you're saying, man. Now let's go to the monthly time frame. It's a mess, but we can do it. This is 1 September. Yeah, because we've made contact with the governing demand, kind of like set up a new demand that's been retested, and now I'm assuming because what would be really dope for price maybe tomorrow to get to that 1 hour order block is if markets get to it and then start pumping up, right? And then markets for the next 3 days
back
like buys so that this red candle closes just above here, right? So literally you want the red candle to lift off all the way a bit there. The red candle lifts off all the way there, then the next month, October, gets to start here, market inefficiencies, and then market goes up. That's kind of like a very good play, and well done on you for holding that. Obviously, the downside of it is the fact that markets could prefer this buy. Only because
multiple time analysis demand.
Yeah. And even that, why does it not look nice now on the H4? Yeah, see, on the H4, you've got a weird scenario. You've got a Talitha area drop, right? And then an impulse. And now let's just remind each other of the best type of setups in price. Then we can end it here. For a demand, I want to see dumb retail traders, right? Drop base value. And then for a good supply, I want to see dumb retail traders buying, right? Base drop. So essentially, this is it. When I just keep it simple, if I really want to go crazy, I need retail traders to sell the same thing I know Deriv or the banks in cases of Forex and whatever are going to buy. And then I want to see an accumulation of orders, not for too long, but it must happen. And I want to see a rally, right? And then for selling, I want the opposite. So this is difficult. I'm not really seeing it there, but it's kind of there. So one of those trades that will work because of other technicals. But for now, on this chart, I have a rally base rally. Did you hear the difference? This is a rally base rally instead of a drop base rally, right? So for me, immediately I classify it as a C-class trade. The 1 hour is no confluence with H4. The 1 hour, it's beautiful, but hey, my guy, you might get burnt, right? You might get burnt on. So only because I'm still to see the type of force that VIX and all these pairs come to these areas here. So this 1 hour might be toxic. I don't know. You can risk what you want to risk, but I don't think I'm interested here. I like this one a bit. Drop base rally. Drop short base rally. I like that one a bit more. It doesn't give me the drop base rally feeling on the H4 time frame, but it definitely at least is there. All right, there's something going on here inside here on the 1 hour time. On the H4 time frame, there's no confluence. I still have my problem of rally base drop rally. All right, so that's the main problem. And I also have a situation where there might have been a supply here on the left once upon a time, and then markets is just kind of like reacting to that, right? So this supply slowed the market down before arriving up here. So it's a tricky one. It's a tricky one. One of these buys is going to work. Obviously, the risk here is you don't take the buy. You don't take the buy here, and markets leave without you, and then they make it impossible for you to enter the markets for like a week without giving you a proper clean market signal, right? A clean market entry point, because you're stuck, because this was the ultimate buy and markets left. So we're gonna have to see. So we could go with like super low risk on this buy here, very low risk on this buy, and then after that we go normal risk here on this one, and then we see, right? And imagine if markets decide to just go shut up, Leroy, and break it. Now, who the hell do you think you are, boy? Now.
Yeah. This plan is still based on the profile for the next 3 days, 3 to 4 days. So it's more like if like what you're saying, that if price doesn't close above that candle there, it just means no sell.
Wait, so, and actually let's draw it. Where you see the candle thing is all the way here.
Yeah.
So I'm gonna make this line yellow so we can see it at least on the 1 hour time frame.
Right.
Can't even see it. Look at the climb, boy.
Yeah.
But VIX. So do you think VIX can pump like that for the next 4 days? Is that like?
It is very possible.
Very possible. Because you see, well, we haven't broken this high, right? So this is lesson number one. This high right here of this blue thing is still standard there. Yes, we're starting to make higher lows. This is a low, this is a higher low, right? Not really, right? Waiting for more lows to come and then markets turn higher. And these higher lows are going to encourage us to get into that buy momentum, right? Until we get into the supply. But after we break this high, see wherever this yellow line is, this one that I'm dancing with right now, let's change the color so we are not confused.
White.
Make it white. Smart man, black background, I like it. Right, whatever, it's probably ivory. But the point is, if markets break past the white line, right, and close above it, and then make it to the yellow line, then we know we've kind of like set the scene for a long-term, buy trend, because that means on our governing time frame, markets are really showing us that they came in for a retest of the engulfing pattern. Now that they are done, they're now leaving, right? And so yes, your play might work, the 1 hour buy, or markets might sit here and use a long wick and trigger some trades here, right? Anything is possible. But either we go very small risk here, and if we're in it, we swing it to make the money worth the while, or we wait here, or we wait there, right? 3 buys, 3 buying options. And on the H4 time frame, H4 only confirms this one right now. H4 for me, in terms of my rules and my understanding, the only safe place to buy this thing is if price comes back there right now. I mean, this is a nice risky trade to take, high risk, blah, 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 because of Fibonacci, and that's fine. I understand all of that. But the first one, the 1 hour one, looks very attractive, but I don't think it will, for me, I mean, complicated, 365, beautiful imbalance, etc. It could work, right? But just be very careful with it, how far it can go.
Oh yeah.
So
it's just more like seeing how price enters that zone.
This one or that one?
That 1 hour one. You see, so it's like, I know, I think we're right there, like 2 a.m. there. I know, we'll see. I'll be probably awake around midnight.
This guy. But now, let me show you another trick. Let's plot line graphs. Let's plot line graphs, right? So let's see. Line graphs, I don't know if you know this. I feel like I said it before recently in the war room yesterday. Line graphs will remove the wicks. So what you're looking at is just the candlestick where it opened and closed. So for me, I like this again. Once again, for me, so when you switch it back to candlesticks, obviously it's not the wicks, the trend line won't look proper. But
it will touch the body instead.
Yeah, it will just touch the close of the body. But at least you can see a turning point. Like for me, I like this. I like the fact that the bearish structure was broken. I like the fact that it was broken by this here. I really like that about it because that gives me hope. Yeah, that gives me hope. But again, look at the imbalance now. Hey, brass, too many things going on, right? If we do that, then bullish engulfing. But if we do that, it's just there's no real strong imbalance here as well. But that's just my opinion. We shall see. For me, so you think by midnight today? I don't know.
Yeah, I think so. It's like what, 8:45? So like a good midnight one there.
Pivot points. Do you know how to use pivot points?
Nah, not even.
We can do it in the next video because I think pivot points would help us. I haven't done them in such a long time. Let's do one quickly. Pivot points, we need the daily, number one, and then we need the high and the close of the day, the previous day. The high and the close of the previous day. So this is the daily, right? Can you see if I just put this is today's candlestick, right? This is yesterday. So I always need the previous one, the highs and the lows. And you can see it will tell me where it opened, high, low, close, all right? And then you're gonna go to your phone, download a simple free app, pivot point calculator or something weird like that. But most Forex app inside them, there'll be tools. I've got only one Forex app on my phone, FX Hours, just lets me know when the sessions are open. So I set alarms on it. But I'm pretty sure, I mean, I've shown you guys this on the
yeah, I remember, yeah.
In the remote course, yeah, on how to trade indices, NASDAQ and all that stuff correctly. I just want to see what Forex tools are in this app. And if it's here, I'm going to do it now. Yeah. So I click there and I type pivot. Pivot is on can you see the word pivot? I don't know if you can see it clearly.
Yeah, I can see it, yeah.
Yeah, all right, cool. So I'm going to hit pivot. And what it'll do is it's going to ask you to answer a couple of questions, all right? So it's going to ask you to put in the high, low, close, all right? High, low, close, okay? That's simple. And you're going to do that for the previous candle. So if you're up at midnight, I think you have to wait for the H4 candlestick. You have to wait until 2 a.m. or something like that to then analyze the candlestick, today's candlestick. But let's just do yesterday's and see how that went. And then we'll end this video here with that. And then maybe I'll teach this thing properly later, right? So I'm here, I'm looking for the open. So I'm just gonna type those numbers in as they are. So the open is 688,614.66.
Yeah.
Nah, something weird happened here. I don't know what happened there. But let's go 6. Oh man, this might not work unless if it's just recording. Maybe it's only built for Forex pairs. I don't know. Because after a couple of digits, it just stopped. 688614. Yeah, it won't let me.
Any manual way, like we can do like on paper or something.
Yeah, it's a painful calculation, my dude. I have to practice it a couple of times just to remind myself. I haven't done pivot points in 4 years, 3 years. Let me go on the internet. Pivot points, pivot points calculator. I used to use the one on baby pips once upon a time in my life.
Yeah. But is the funny pivot point thing is the same thing as that funny 11 a.m. thing I was talking about yesterday? With the highs and lows.
But yeah, something like that. But what the pivot point user will then start to map out ranges. So it'll let you know what the popular support and resistant areas would be. All right, so let's just try this one. I've shared my screen. I don't know if you can see it.
Yeah,
right, so all right, so I'm just gonna be on screen 1 here, getting those numbers again, and then no, I don't want to take a trade on VIX. Are you high? Right, there we go. So that's 6886. So I'm gonna write here 6886. The reason why I think this would work okay with VIX and stuff is because, you know, derivatives uses a lot of algorithms to trade against retail traders, right? Because it's their market. And what this does is it kind of like samples out retail trader support and resistance strategies, right? So it's like it's almost like a sampler to where the most likely areas retail traders are going to be waiting. And then what happens is if markets on the day, so like if you look at it at 2 a.m. or 6 a.m. in the morning, if you notice that price closed above the golden pivot, so the pivot area is going to be in the center. So if it closed above, it's supposed to mean it's going to be a bullish day. And what it will tell you is it's going to be a bullish day, but these are the resistance points to watch out for, right? Or if it closes below the pivot number or the pivot point, it will be like, look, man, this is actually going to be a bearish day, but these are the supports to look at. And then traders then, you know, adapt their technical analysis to that, et cetera, et cetera. But I didn't like it for Forex because, you know, supply and demand gave me, you know, a spectacular win rate. So I didn't want to like taint it. I did not want to taint it. So I'm just trying to get these other numbers out here. 688, comma what?
What 65, I think.
66, yes. 6.
Yes.
All right, so here on the computer it's going to let us write. So maybe you need to get a specific app. And then the high of the day yesterday was 702870. 702870. 702870. Comma. Bro, aren't you hungry? We had supper. I just chowed before we did this, man. I was hungry.
Nah. I haven't eaten supper yet.
44. Hey, is mom not like stressing, or does she like these teenagers?
Nah, she's not stressing, bro. She's not stressing. I'll eat later. I'll eat after this. Don't crack.
All right. Now the low is 670644. 670644. 670644, comma. Come on, 040. Right, so you have to kind of like be as accurate as you can with this kind of stuff. And then the close of the day, where did markets close? And the manual way would obviously to read this stuff off your charts. And the person who taught it to me, by the way, was so obsessed with doing this stuff manually years back, man. Like I'll find my old notebooks, my old trading journals will have a lot of this stuff in there, so then I can remind myself of the manual calculation. He hated it if I did it this way.
Yeah, I can see why. I also prefer the manual way.
Well, I literally had no choice. I was like, you can't even ask him if you don't send him a picture of your calculation. You just said it at 6 a.m., right? You used to make us wake up at like 4 and you set it at 6 a.m. So you already know the day, and we'll still get chowed sometimes. Like, but bro, your strategy. Bro, it's been a journey, bro. Like, I'm losing sleep and money at the same time, baby. 6-9, 6-3, 4. And when I started trading supply and demand, I got back to those hours of rest, those beautiful, glorious hours.
Yeah. Got your stress back, right?
Yes, this man, right? So I made a mistake. There's no 0, and I'm just 7-2. All right, cool. There we go. So I'm done. So after you've put all this stuff in, remove the 0. All right. I'm supposed to, I think, hit calculate. Oh, it's already calculated. Already did it. Yeah. Right. So this is where's the midpoint? Is there a midpoint? Did I see something?
Yeah, below R1.
Yeah, there's the midpoint here. So I think this is the level to watch for. So I'm gonna take these levels right now, but this is not the simpler to read. I mean, I don't even understand half the stuff here.
Hey, well, what does PP stand for?
Pivot point.
Then R1 resistance.
Resistance 1, resistance 2, resistance 3, resistance 4. Support 1, support 2, support 3, support 4. There's the pivot point. This is what I'm looking for, this blue number there. So I'm looking for the actual PP, because first of all, you need to figure out. So by the way, if you want to do it manually, it's the high of the day plus the low of the day plus the close divided by 3. Simple. You just have to get these numbers correctly. High of the day, low of the day, and the close, right? And then divide by 3. Then you'll get your supports, and it's like you have to duplicate it. I'll write out the full formula for you, right? But now let's go to the charts first of all and find this level here, right? So I'm gonna switch us back to the wrap your arms around me, Lord Jesus. Right, okay, fine. So let's make sure I don't want too many lines in the chart now, because you're gonna have to draw all these lines. Right, so let's remove all of you. Goodbye, goodbye, goodbye. Right, but remember, we're tracking the pivot position for today based on yesterday's highs and opens and closes. So let's see how markets reacted to this information, right? Number one. Number two, I'm not yet 1,000% sure I did that 100% correctly. So the first thing I'm doing now is I'm gonna put in my parameters, right? So I'm putting in that number. The first number I'm putting in is the number in blue, the pivot point. The actual pivot point is 689,963.07. This is gonna show me the middle. So you can see it's like perfect. It's literally the pivot point, right? So automatically, based on yesterday's data at about 2 a.m., 6 a.m. in the morning, whenever you woke up, you would know that today is going to be a bullish day for VIX, because markets open on the other side of the pivot. Are you with me, bro?
Yeah.
All right. So you can look for supports if you're assuming there's going to be a pullback, right? But the thing that's going to be EP, right, an enemy to your, I'm going to change the color of the resistance lines. The thing that you're going to be looking out for now is where the resistance is going to be. So now let's go plot the first resistance according to the pivot point calculator. All right, so we've got a PP here. This is the number. This is our pivot point for the day. Resistance 1 is this one here, 70282, blah 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 blah. Right. So I'm going back to the live account. Right. I'm gonna put that number in now. So I'm gonna go to parameters. And I'm going to write it down. So resistance 1 is 709,282.09. That's resistance 1. Now, let's just quickly, because of time, and this video is not too long, let's go to the H4 time frame. And let's start to track. So we're trying to see some friction here. You can see price fluctuated. Let's do a time check here.
Yeah, can you put like a vertical line dividing today and yesterday?
Yes, sir. That's literally what I meant by time check. It's great minds, man. What's the date today? 27.
Yeah.
So let's, so this was 26.
You try jump on the 1 hour time frame, then come back to H4. It's like, it's much easier.
That is much easier. You're right. But it's 3 o'clock 26, 4 p.m. 26, 10 p.m. midnight. So the H4 candlestick is this one, the first one for the day. But anyways, this is literally 4 a.m. Right. So this is literally 4 a.m. So this, so markets literally opened above the pivot point, and then for the crazies, right? This is what you're waiting for, like a quick pullback, and then you're holding a buy. All right. If you did this the day before yesterday, because this is literally about you said you want a vertical line there. So that's 10 p.m. So this doji candle kind of like starts the day. So this doji candle here is midnight today, right? And then this thing, remember, it's just letting you know that potential resistance is going to be here. And if we kill the auto scroll and just cut back, so we're looking at this red line. If you cut back on history, you can see that's actually a resistance point. You see that there?
Yeah.
The support here. Kind of held that down, but not perfectly. Right, definitely a resistance, support, resistance. Right, look at that. So retail traders will be happy, party, resist. So see, resistance one makes sense. All right. So that's all it's saying. It's saying if you're one of those people who don't know how to swing trade, open a buy above, right? But your stop loss now. The one thing I hated about the strat was your stop loss. Yeah, it's wide. This is wide, right? And tomorrow, for me as a supply and demand trader, this is what you're waiting for. You're waiting for a pullback into this 1 hour. Is that not what you're saying earlier on? Like you rather you just grab this pullback here, beautiful imbalance, and then buy as low as you can there. All right. So there's a possibility, but it's essentially it's saying, look, if you don't know what you're doing, enter a buy. This is where you should have kind of like taken profits or locked profits or broken even, because this is the first resistance. I'm just going to draw the second resistance, and we're going to call it a night, my guy. I mean, I've taken up too much of your time. Resistance 2. Resistance 2 is this one, 722.18947. So I'm just going to strap that in. Go to properties, parameters, and then there we go. So resistance 2, I'll say that again, is 722.18947.
I can't see your MT5.
Oh, you're seeing, all right, cool. I've already plotted it in, but basically this is the MT5. So this is resistance 2, right? This one here. This is resistance 1. This is resistance 2. So you can see previously, markets did kind of like pull back at that level, try to bounce off that level, kill the auto scroll, right? They bounced off that level as a support, they became a resistance, right? So resistance 2 is real, right? And then markets more recently now, closer to the time before our session today, 9 a.m., markets bounced there, markets broke out, sold out, right? So if you bought in, time to get out. That's pretty much what it says. Like, okay, look, man, resistance 2, things might get hot, right? So be careful, right? Broke in, sold out, right? The supports will naturally be below the pivot point. Here's our pivot point here. The supports will naturally be low. So if we've drawn 2 resistance areas, can we just draw one support? Can we draw support 1? Because I'm assuming it's going to have confluence with this H4, H1 demand that I like. Just out of interest. This is what backtesting is about, man. If you're still watching this video, please, again, appreciate you. But this is the work. A soldier goes to war, grabs a gun and shoots people. A miner picks up a shovel. You wouldn't believe it, dude. I deleted everything I gained by mistake on MT5.
Oh man.
It's fine. We know where the pivot point is roughly, and we know where the H4 demand is. So I want to draw this here, support 1. I'm actually going to send Deriv an email. if I'm gonna be a full-time client, bro, I'm gonna send an email, but I'm like, nah, this is not working.
I feel like you two could be best friends, bro, by your emails.
Dude, those guys send a lot of emails, bro. I to unsubscribe to most of their newsletters. Just tell me when your system is down. That's all I need to know. Right. So support 1-677-055-69. So this is support 1, the first support of the day. Check that out. That's support 1. Let me just quickly, while we're here, redraw the pivot point that told us that VIX was gonna be a buy today. So there we go, and then I go here. So the blue number, I'm just drawing the actual pivot point, right? 689,963.07. So this is where the pivot point was. You see that there? Order block.
Yeah.
So essentially, had a pullback happened for a supply and demand trader, this would have made so much sense today, right? And it hasn't, but now we know that at least today's support was somewhere here, right? And we don't know if it's going to be tomorrow's support, but there is definitely a support there. I feel like more buying is going to happen there. And then obviously resistance 1 was just above. I think resistance 1 earlier on was something like this. So this was the range. And this is why I don't really like, it's a good strat, but I don't like it because it exposes you to a lot of risk, and it's just support and resistance. So we know that markets can break these anytime. But the risk that it exposes you to is, where the hell do you put your stop loss? Because if this is my support, then that's fine, because my support, my stop loss is always going to be under my order block as a supply and demand trader. But if my buy is above my pivot point, that's a wide range, man. In fact, if you're buying just above here, you're buying a risky buy. You're buying into a supply, which is why markets went red, right? Now, do you think most retail traders have the psychology to go, no, it's okay, it'll turn, right? They all close in losses. Before they start, they literally just hold losses and then they chicken out and they close. So that's something to watch out for. But I would use pivot just to see what kind of a day we're having. Simple. And then after that, so you want to buy here. You want to buy here, right? But this is, you already knew today that markets were going to open, we're going to go bullish because of the pivot. So this is your 1 hour time frame that you want to buy in the future. But if you're trading today and this is what you knew, pivot is here, price is going up, you do the factor of 4, right? So factor of 4 on the 1 hour time frame. Remember, it's when you're going through 4 times. 1 hour is 60 minutes. 60 minutes divided by 4 is what? 15. So you go to the 15 minutes chart, right? Factor of 4. You just factor of 4. So if you woke up in the morning, you're like, okay, fine. This is my buy area right now. Now it's only like 9 p.m. and price is starting to calm down. But I'm saying during the day, let's see what will happen on the 15 minutes chart. Dude, after this, just kill the internet. We need to stop talking. Right. So this is a factor of 4, right? So this is what your area of value on the 1 hour time frame, right? So you can see here, markets did a couple of cool things. I like this. I mean, I could really look into this stuff and see if I can design a strat, back tested and stuff like that. There was rejection here. So this is sign number 1, massive rejection. So sellers can't go low. Sign number 1. Sign number 2, markets didn't even make it all the way down there. Sign number 2 anyways, bullish engulfing pattern. So this for me, if I was up, might have been it. The problem is I'd be waiting all the way here for a retest for that bullish engulfing pattern. And in this particular case, markets didn't come through as low as I would like to wait. So remember, we like to cover that area of competition there and then have an order block there. That didn't happen. What happened was, if you took the actual engulfment, markets exploded with you. So straight after the red on the 15 minutes time frame, just take the buy. That's what would have and then this would have been money for the day. But then what time is this? Okay, since this is normal serious trader morning time, right? Full-blown market rally. And now either people are taking profits No, this is literally between 5:30 in the morning up until 7 or 7:30. Then market ranged around an order block and then went a little bit further and then sold off, creating a bearish engulfing pattern, right? When we know there's a resistance somewhere just above there from our pivot points, then came back into that area at about 4 p.m. and now there's a dead off sell-off. Now, throw that all away. As a supply and demand trade on the 15 minutes time frame, you know that there are unfilled orders all over here. You know that.
Yep.
So that could be where you can risk it all. It's all covered inside this 1 hour pin bar thing you want to take. Right. Markets are
and all rectangle thing is covering the 3 fingers thing that I didn't explain properly.
And so the 3 fingers thing again for you would be a good trade to take.
Yeah.
Then,
just the problem with the 3 finger thing, right? It's sometimes price will go down, like deep inside. So you could be running at a loss, then SL, that type of thing. But otherwise, I find it good.
I'm just trying to arrange your target here. Oof. Then you open H4 and you're like, nah, bro, I don't want this smoke.
I also see it, bro.
You check on 15 minutes, bro. The small time frames are dangerous, right? I feel like, yeah, I'm gonna make tons of money. And then on the 30 minutes, you're like, you know what? It's not that bad. I think, yeah, look at this imbalance. You're like, you convince yourself, nah, I got this. And now my area of value is tight. And now I've got an imbalance, perfect imbalance. This is perfect. And then on the 1 hour, you're like, yeah, still good because there's a range here, blah, blah, blah. We broke a supply, the demand broke a supply. Yeah. It's perfect. Then H4 is like, dude, what's good? What are you talking about? But it could still work. It could be like a retracement. I think this is a nice thing to actually come back to tomorrow. So for me, I won't trade VIX until maybe Thursday, Friday. I'll just keep back testing a lot of stuff. But I'd actually like to see how price reacts tomorrow. So I'm going to do pivot point. I'm going to do supply and demand. I'm going to leave my fib here. I'm going to leave the blue order block, your 1 hour order block. Yeah, and then tomorrow we can chat. What time are you free tomorrow?
Like I'm free the whole day. I'm basically free the whole day. It's just the electricity problem. I'll find out after.
All right.
Yeah.
Find out and drop me a WhatsApp, man. Love you long time, little bro.
Yeah, same to you, bro. Same to you.
All right, guys, if you're still watching, thank you so much. I hope you enjoyed this simple back test. Very important. We now have actually got a good mindset of what's going on in Vix75. The next one will be slightly shorter, right? I'm going to try and kind of like, shorten these videos, but we had to back test everything. And for me, I feel like there was over a 90% win rate on supply and demand on the daily time frame. So that's encouraging, right? So now we want to see how the small time frames play. Say that you're still there.
Yeah, I'm still there.
On the daily, just don't forget, there really isn't much to hold you. But then again, because remember, our back testing data so far is only on the daily time frame, right? So
yeah,
we have this situation here, and this could have been the retest. I'm just going to go to H4 and see. So sausage. Bullish engulfing pattern all the way down there. Markets explode up, consolidation, markets come back in. So this is a retest there. It looks like a retest on the daily time frame, right? Markets pinned here, but your 1 hour is there. So just be very careful about that. But then it could be a fib, could be a golden ratio, right? All the best, bro. I won't be in that trade with you, but if you win it or if you take it, good luck, ne?
Yeah, thanks.
All right. WhatsApp me your power schedule for your country there tomorrow, and then we'll catch up tomorrow. I'll make time.
All right, no stress. I'll hear from you.
All right, peace and love, man. 365, shake my hand, everybody watching. I appreciate you. Cheers, boy.
Cheers.